Before we even look at the chart, let's talk about what's really driving gold this week, because fundamentals are setting the tone for this move. Between key U.S. economic data, shifting Federal Reserve expectations, and rising geopolitical tension, gold is entering 2026 with serious momentum. So the big question is gold just pulling back, or getting ready for the next major leg higher? Welcome back to the channel. Kindly like and subscribe. And Happy New Year to everyone. I hope 2026 starts strong for you, both personally and in the markets. Let's kick things off with a full fundamental and technical breakdown of gold, XAUUSD. Now let's talk fundamentals, because this is where things get interesting. This week, markets are focused on key U.S. data, including jobs numbers, services PMI, and inflation-related releases. These reports will directly influence expectations around the Federal Reserve's next move. Recently, Fed messaging has leaned more cautious, with markets pricing in the possibility of rate cuts later in 2026. A softer Fed stance typically weighs on the U.S. dollar and real yields, and that's historically bullish for gold. At the same time, we're seeing a rise in geopolitical risk. The recent fallout surrounding Venezuelan President Nicolas Maduro has added uncertainty across global markets. Any instability tied to energy supply, regional politics, or emerging market risk tends to push investors towards safe haven assets, like gold. When you combine bullish technical structure, dovish Fed expectations, and elevated geopolitical uncertainty, the overall narrative continues to support higher gold prices, at least while key support levels hold. That said, the bullish outlook starts to weaken if we see a strong 4-hour close below the 4,300 demand zone. A deeper break below the daily demand near 4,200 would force a full reassessment of the trend. When geopolitical uncertainty rises, capital tends to rotate into safe haven assets, and gold is one of the primary beneficiaries of that shift. So fundamentally, we have softer Fed expectations, data-dependent uncertainty from the U.S., elevated geopolitical risk. All of that provides a supportive backdrop for gold prices. Now let's move to the technical picture. On the 4-hour time frame, gold remains in a clear bullish structure. Since late October, price has respected this rising trend line, consistently forming higher highs and higher lows. Recently, price rallied strongly into the 4,530 region, followed by a sharp pullback. But this was a healthy correction, not a trend reversal. Price pulled directly into a well-defined 4-hour demand zone around 4,300, which also aligns with the 0.382 to 0.618 Fibonacci retracement. Buyers stepped in aggressively at this level, confirming strong demand. As long as price holds above this zone, the bullish bias remains intact. Looking ahead, the first upside target is around 4,375 to 4,400, where we may see partial profit-taking. Above that, the next key level is the 1-hour breaker block around 4,450. A clean break and hold there opens the door for a move toward the upper trend channel near 4,550 and beyond. On the downside, a strong 4-hour close below 4,300 would weaken this setup, and a break below the daily demand near 4,200 would force a full reassessment. Until then, gold remains bullish, supported by both fundamental drivers and bullish technical structure. If this breakdown helped you start the year with clarity, make sure to like the video, subscribe, and drop a comment below with your outlook on gold for 2026. Let's make this a disciplined and profitable year. I'll see you in the next one.